Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Dave Kranzler, fund manager and publisher of the Mining Stock Journal and the Short Sellers Journal. And Dave, it's always great getting you on the show to get an update on how you're looking at the precious metals themselves and also the equities, the gold and silver equities. Let's start it off with a look at gold as a monetary metal, as a safe haven, as a chaos hedge. And even as a momentum play, we could argue, Dave, gold has had a bang up year in 2024. It closed the year at the highest annual average price we've seen ever. It had some spikes up into the 2800s. And then starting in 2025, we've had a nice ramp up in January and February where gold just seems to keep hitting all-time daily highs, weekly highs. We had an all-time monthly high in January. A little bit of a pullback at the end of last week, but overall, pretty good action in gold. How are you looking at the yellow metal?
I look at it in awe. But first, thanks for having me on again. I always enjoy talking shop with you. I mean, it's had a big run. It's gotten technically overbought, and I think when the RSI and the MACD show extreme overbought readings, that's when the paper operators on the COMEX attack it, which is what we saw on Friday. There is also, again, and this it goes through these cycles in a bull cycle where all of a sudden you get a lot of highly speculative money just being thrown at the miners and gold futures, silver futures. And so it pushes the sector into a condition where it needs to have a technical pullback to kind of squeeze out the excess. And I think that may have started on Friday, offsetting that, of course, because in my opinion, away from the continuous devaluation of fiat currencies, particularly by the U.S. and China right now, the enormous demand and appetite for physical bars sourced in London by the Eastern Hemisphere, and it's not just the central banks; it's sovereign wealth funds and high net worth buyers, large, very wealthy buyers, family offices, things like that, and what's changed over the last 3 years or so. I mean, some of these buyers have been around for a long time, but they would typically just leave their bars in London for safekeeping. And ever since the U.S. seized Russia's assets that were being held in Western central banks, all of a sudden, most of these buyers started repatriating their gold bars out of London. And that's created tightness in the physical market, and that's been a big factor in driving the price higher. I don't think that's going to go away. I mean, you see more and more non-Western central banks and governments report that they're going to start buying gold or adding to their existing gold. So I think it was Azerbaijan. I just saw an article today where they announced that they're going to add more physical gold to their sovereign wealth fund. And there's also, interestingly, and I have a feeling this is Russian and Chinese influence, there's been several countries in Africa that have, in the last year announced gold acquisition programs for their central banks.
Well, and our U.S. Treasury is still considering possibly marking the value of gold on the books on the balance sheet from $42 up to something like $2,800 or $2,900, just as an idea. But there's a lot of central bank buying where now gold is the number two asset held right after U.S. dollars, surpassing the euro for the first time for many central banks. So definitely a lot of big buyers in there. What about the retail side of things? Are you seeing a lot of investment demand for gold and silver bullion or even on the paper markets from Western, Eastern investors?
Well, I mean, in the Eastern Hemisphere, the populace, most of those countries, it's in the citizens' DNA to buy gold and silver whenever they have extra cash, and it's automatic, especially in China and India. Now, I just saw a report that said a lot more Europeans are starting to accumulate gold, particularly in Germany. I used to track like the mint sales, and I kind of gauge demand in the United States at the retail level based on the premiums that coin dealers can charge, right? And right now, I mean, I've heard reports that there's been a lot of retail investors who have unloaded their silver back onto coin dealers. And I think that household financial stress is driving that. And the premiums are very low. I mean, right now, if you want to sell a gold eagle or a silver eagle back to any of the major coin dealers, that they're paying a discount to the spot price. When I say spot price, everyone uses Kitco as the reference price, even though it's technically not the spot price. But so that tells me that demand at the retail level in this country is not as strong as you would think it would be, given the moves that we've had in gold and silver. And also, I think, to the extent that retail speculators have cash to throw at the market, and they're throwing their cash at the NASDAQ stocks. And that's been, you can back that up with weekly retail numbers that, flowing into ETFs and individual stocks and call options.
Well, you bring up an interesting point there, Dave, that U.S. investors in particular, and even I was just in Canada for some conventions, a lot of them are still buying U.S. stocks. A lot of European investors were there, and they're also buying U.S. stocks. There is a mania into AI stocks and quantum stocks and space stocks and a lot of the technology sector that's taken some of the luster away from gold's move higher. Do you think that's going to continue to be an issue? Are you in the camp that we need to see some of the general markets roll over to bring in that generalist money, or can the forward propulsion higher in metals prices just bring more generalists in just because they start picking it up on their screen?
Well, at the institutional level and the so-called smart money level of investors, there's been decent money flowing into the mid cap and large cap mining companies. But your segment of the market that would ordinarily be throwing money at the junior project development mining companies, as you point out, they're chasing Nvidia, Tesla, the leveraged ETFs, like, 3 times the SOX. I mean, it's insane. 2 times Nvidia, 2 times Tesla. And that's where all that speculative money is going. So we haven't seen an extreme speculative wave hit. Well, it hasn't hit the sector, period, but it for sure is completely ignoring what I think are insanely undervalued opportunities in junior project development stocks.
Well, let's get into some of the junior project development stocks and also even the small and mid-tier producers. We were talking off mic that some of them are still presenting a value. And there's also this trend, which I'd like to maybe start with, Dave, where over the last year or so, we've seen a handful of juniors that have solid development projects decide to buy a producing asset to, launch themselves into the producer category, bring in some revenues from that, and then use that to fund the development side of things. So any thoughts there on small producers that were developers that are now working on multiple projects?
Yeah, I think it's an interesting trend, and one that isn't really getting a lot of airplay, but we've seen, a handful of companies go and acquire older, smaller operating mines and either restart them or continue operating them with plans to expand those operations or extend the mine life. And they're doing it as a means of producing free cash flow that can be used to advance their larger development project. And it also, it offsets a lot of the risks that are inherent in trying to get a project over the finish line, right? Not the least of which is permitting. So, as we were chatting, we saw Heliostar acquire the Florida Canyon assets, which were the old Argonaut assets in Mexico. Integra Resources, which has an awesome project in Idaho, acquired the Florida Canyon mine in Nevada. And I was familiar with that from the days when Ripatch Gold owned and operated it. So, and then, Discovery Silver just acquired Newmont's Porcupine gold mine complex up in Canada. And that looks, especially for the price they paid for it, it looks like it's going to be a home run. And the benefit, aside from offsetting development risks, is that these projects generate enough free cash flow so that these companies can continue advancing their projects and get them to the finish line without having to issue any more shares. And, I've chatted specifically about that with Integra and Heliostar, and they think they're going to be able to get their projects permitted and started up and being built and started up without having to issue more shares. And then there's, Cabral Gold is kind of taking their own route in doing that. They've got in their QQ project, gold project in Brazil, which is a very high grade open pit project. They've got kind of an at surface resource that's they call it the golden oxide blanket, and it's saprolite. It's mud and gravelly material, and it's inexpensive to process. It's got decent grade. They've already released a PFS in October of 2024, and they're working on an updated PFS. And once they get that thing started up and going, and it's already permitted, once they get that thing going, I mean, again, it'll generate free cash flow so that they can advance the bigger underground project. And it's not an underground mine project, it's still open pit. It's the mineralization that's even higher grade that sits in the rock beneath the topsoil. They'll be able to get that advanced and hopefully up to a construction decision without having to issue more shares.
Yeah, I think all four of those examples, Heliostar, Integra, Discovery Silver, and Cabral, are all taking that same track where they're saying, hey, I can get revenues and cash flows coming in. Look at the margins that you're making right now with gold running even higher, which is a higher price than what they were initially planning for when they took over those projects. And then also, the development project that they have waiting in the wing is really the one that they want to still keep de-risking, maybe do more economic studies, maybe some more definition drilling, and some of them even have even other projects beyond even their main development project. So they could really go from a small producer over time, over a 3 to 5 year window, into maybe a mid-tier producer, and that's some of their goals. Let's maybe hone in on some of them specifically. Let's look at Heliostar first, Dave. They got the La Colorado and St. Augustine mines from basically Argonaut out of that Florida Canyon. And it looks like things are going pretty well, but Ana Paula being the big development project they have, give us your thoughts as someone that speaks with management regularly at Heliostar.
Well, first of all, we'll get a in-depth update on the San Agustin and the La Colorada mines when the company reports its numbers, its quarterly numbers. But my impression is that both mines have greater potential than they expected when they agreed to purchase the assets. So I think it was 3 or 4 issues ago, I kind of modeled the free cash flow generation from both mines with the information that is available now. And they're even more valuable. I'm just waiting to see the numbers than when I modeled it. But on a price to free cash flow basis, just those 2 mines alone are worth more than the market cap of Heliostar. And that was when Heliostar was trading in the 40-cent range. I'd have to go back and relook at the numbers, but obviously Heliostar is a lot higher than it was when I did that analysis in my newsletter. And then you mentioned Ana Paula, and that thing, the more they drill it out, infill and exploration drilling, the bigger it looks like it has the potential to be. So I know when I had dinner with Charles Funk and Rob Gray, Charles, he looked at me in the eye with a straight face, and he said he thinks he can get this stock up to a $500 million market cap stock in the next 3 to 4 years.
Well, Dave, I look at it and they're closer to 200 right now, so that wouldn't be that wild of a move. That's 2.5 times higher than where it is now. But I think the value of just Ana Paula would underpin their current market cap just as a development project, not to mention the 2 producing mines. And they even have other development projects we're not even talking about here, like Cerro de Gallo, and they have San Antonio that could be other kickers for the company that they're getting zero value for. So it doesn't seem like a stretch for them to get to a 500 million market cap at all when you look at the sum of the parts. How do you look at that as an investor where you go into a company, and we could pivot over to Integra and make the same point? You look at the sum of the parts. You look at the producing assets, the big development project, and even some of the exploration development projects. And if you add up all the NPVs on either Heliostar or Integra, the company should be multiples higher, and yet the market is still asleep to that. Do you see that as something that may never get realized, or do we need more of a wild bull market before those valuations catch up? Or is it something that would be caught up if they were taken over by even a larger company? How do you position yourself accordingly?
Well, first of all, let's look at a couple things. I mean, I was talking US dollars. I think you're looking at it in Canadian dollars. So if I just use the primary shares outstanding and the current share price, it's about a $145 million market cap in US dollars. So, to get it up to 500 million. I mean, that's a little, what, about a three bagger. But also when we were discussing the potential economics of everything they have, that was back in September of 2024, right? So they hadn't gone in there to rework the numbers at the two small operating mines. Ana Paula is a bigger project now. They've done a lot more drilling, and then obviously the price of gold is considerably higher. So you could probably translate 500 million back then into three-quarters of a billion to a billion based on updated economics for all of their assets, plus the much higher price of gold. So, this is a stock. I mean, I trade in and out of, say 20% of my core position in my personal account, but in the small fund that I manage, it's buy and hold, and I just add to it whenever it sells off. In terms of whether or not they get acquired, I mean, it's kind of a double-edged sword. If a junior with a great project gets acquired before it experiences the second wave of the Lassonde curve, as long as it's a decent offer, great, you get your money out quicker, and you don't have to bear the risk of the company being able to get the project over the finish line. But on the other hand, if Charles has 3 to 4 years to advance everything he has in the portfolio without worrying about getting taken over, I do think he gets this thing up to three-quarters to a billion. So, and the problem is that, and thankfully, the large cap mining companies, for the most part, aren't taking their free cash flow and going after these juniors, at least at this point. But if a company puts a reasonable bid on the table, the management has no choice but to take it to the shareholders, the management and the board. So, and I don't know that insiders control enough of the shares to block an acquisition. But I'm not worried about an acquisition because I don't think it's an immediate threat. I think you'd have to probably wait at least until Ana Paula is formally permitted for construction and operation to start worrying about that.
Yeah, Dave, that's kind of the angle I was going at with both Heliostar and Integra is, okay, they just picked off these two producing assets from larger companies that it was non-core to them. That's why when the merger happened with Alamos and Argonaut, Alamos didn't want these two mines in Mexico for Heliostar or the Florida Canyon mine in Nevada that Integra has, but it's very core for these small companies. But what they do have is these development projects. So Ana Paula being the bigger prize with Heliostar, once that's even up and running, then I think they're of a size that they're a mid-tier, then that makes them more interesting to a larger company. Same thing with Integra. They picked up the Florida Canyon mine, and yeah, we followed it on the show since it was Rye Patch, and then to Alio, and then to Argonaut, and now into Integra. But they have the Delamar project and the Nevada North project, two different development projects inside there that could be a lot bigger cash flowing machines than just the Florida Canyon. When those get up and running, could they re-rate more as a mid-tier, or could they be more interesting to larger companies when their development projects come into their full value?
That's a good point. I always forget about the Nevada assets. Those are both open pit, probably heap leach operations. I don't think their stock gets any credit for those. The interesting thing about Delamar, and I can't remember the percentage breakdown off the top of my head, and it would have changed by now anyway the last time I talked to the company about it, but there's a material percentage of silver that's a component of the mineralization in the resource at Delamar. So, and that, to me, I kind of look at that as a hidden asset because the market just looks at Delamar as a gold mine, and it's a gold silver mine is really what it'll turn out to be. So, I think those guys at Integra, man, they're great operators. They've done this drill multiple times, right? So, and that's an important component that a lot of investors don't really think about. It's one thing to be an exploration geologist and find a great deposit and advance it, but you really need to have operating guys who have gone through the permitting and mine construction and startup process in your management team. And so, Delamar, those guys have done it a handful of times. Heliostar has recently added VP of operations and mine construction and operation personnel, as has Cabral Gold. They recently hired a VP of operations, and that's a critical component to getting a project over the finish line and up and running.
Well, let's talk a little bit more about Cabral because, to your point, they've got an interesting model where they're doing something similar. They're going to be able to mine that saprolite at surface, the oxide material, generate some revenues from it to build the larger pit, the larger project down into the rock. This model again is able to reward shareholders with some cash flow up front and some revenues up front to help fund it without that all coming out of equity dilution. So, talk to us about the latest and greatest from Cabral. They just had some news out to the market just recently.
Yeah, they released. It was funny because I was getting ready to email the CEO to get an update for my next issue of the Mining Stock Journal, which comes out Thursday afternoon. And lo and behold, a news release hit my inbox last week. So what they're doing is they're in the process of producing an updated PFS that'll build upon the initial PFS they released in October of 2024. And I think this will be a bankable, meaning I know the company is already having conversations with interested parties to finance the mine. So they've got one drill rig that is upgrading the inferred oxide gold resource at a recent discovery and target. And the inferred you can't incorporate into a PFS, but if they can get a decent amount of it moved up to indicated for the updated PFS, they'll be able to incorporate this mineralization into the economics of the model. So that'll improve the numbers that we saw in October. They're also doing some exploration drilling to follow up on some recent discoveries that are in the proximity to their existing deposits. So, and then the engineering firm that's doing the PFS for them is looking at opportunities to lower the upfront capital costs, reduce operating costs, and they're already talking about building a larger processing plant than was originally envisioned. So in all likelihood, the updated PFS will show a material higher net present value and internal rate of return. The internal rate of return is ridiculous anyway because it's basically topsoil that doesn't need much processing before they go through the mineral extraction. It's got a low upfront capex and really low all-in sustaining costs. So I asked Alan about the potential timeline to start up, and he said he hopes to be in a position to make a construction decision in July, and then you got a 12-month construction period. So theoretically, this thing could be producing gold in less than a year and a half.
Pretty exciting, and it reminds me of Lobo Tigre's pre-production sweet spot, where he's done all that research on companies that are about a year out from first pour, and there's usually a big re-rating in the stock during that time period as new investors come into the stock to get positioned in front of the production story. So pretty exciting time for Cabral, and we'll definitely keep following along with the news flow when they put out that updated economic study. Just touching briefly on the Discovery Silver deal that we mentioned, we don't have to dig in deep here, but just from a philosophical standpoint, Dave, I always thought of them as a big optionality play on silver going higher because they had, I think, 1 billion silver equivalent ounces when you mix in the base metals. They reformatted their economic study to be a smaller area where it was going to be several 100 million ounces of silver to make it more digestible. But then they go out and buy the Porcupine Mining Complex, which has a couple different mines inside of it and some development projects from Newmont. And the gold area, what do you think about a silver optionality play that has the largest undeveloped project becoming a gold producer? Any thoughts on that as far as how it changes the outlook for the company?
Oh, it's a game changer. They're a producing company now, right? I mean, their market cap is 850 million. So they only had time to do a PEA on Porcupine before they had to make a decision on whether or not to buy it. And the MPV at 2650 gold is, and this would just be kind of the phase one portion of the project, is $2 billion. So Compare that to the market cap of 848. I mean, you're not even getting full value for the value of Porcupine that's been modeled. And that is going to be achievable because they think they're going to be producing 280,000 ounces on an annualized basis out of the box, right? And then you've got Cordero, which I was familiar with from the time that it was Levon Resources. And this is way bigger than what the CEO, who unfortunately passed before he could see this thing to fruition. It's way bigger than he was contemplating, although he always had told me that it had a massive underground resource. It's always been contemplated as an open pit operation. So the feasibility NPV is 2.2 billion on this. So you're when you buy into this stock at $850 million, you're basically getting 4.2 billion of NAV. So, I mean, to me, that's just absurdly undervalued. There is still risk of getting their open pit permit until they get it, but they're pretty confident that it's going to happen. And, the guys that they've got working on it down in Mexico from the political side are seasoned veterans. So this stock is just, it's going to be the gift that keeps on giving. And, to circle back to Porcupine, what's interesting about that is there's one of the mines on the complex, which isn't operating right now, but it has something like an 11 million ounce inferred resource. Now, obviously, inferred is a different animal than something that's measured, indicated, proven, probable, right? And as they conduct the infill drilling to show that to test whether or not it's an economic resource, they might lose some of that inferred, the size. But then again, who knows? They could always make some discoveries also, because that happens all the time in this business, where companies upgrading an inferred resource, drilling to upgrade an inferred resource, and all of a sudden they're finding, new and higher grade mineralization beneath the surface.
Well, Dave, with all four of these companies, Heliostar, Integra, Cabral, and Discovery Silver, when you look at the NPVs underlying their development projects, and again, the sum of the parts, when you add up both the producing components, what that would be worth, especially at today's gold price, and then you look at what all the development projects would be worth, their NPV, in every case, they're all severely undervalued. Is something broken in the way investors are valuing these companies right now? Because in prior cycles, one would have thought at $2,900 gold and $32 silver that these things would be rocking higher. Why is there such a disconnect between the valuations they're getting and the valuation of all their assets?
Well, I mean, part of the problem is that most of these companies, not Discovery, but most of these companies are tiny market cap, right? And so for a decent sized investment fund, say at Fidelity, to take a position in Cabral, I mean, it would have to buy the entire company in order for the investment to have a material effect on their performance, right? So, and that's not going to happen. So typically with these micro caps, the junior product development micro caps, it's a large portion that drives it are retail investors in Canada and the US. And what really gets them moving is when the highly speculative retail money starts chasing them. And we haven't seen that yet because the speculative retail money is too busy throwing money at NVIDIA call options. So, I don't know that it's necessarily going to take this to happen for the juniors to get some love per se, but certainly if we get a significant sell-off in the stock market, and I think there's good cause for shorting stocks like NVIDIA and Tesla, then I think you'll start to see that speculative money look for other opportunities. And this one's staring everyone in the face. I mean, it's hidden in full sight.
Well, and as someone that writes the Short Sellers Journal, I think, it's a good point you're making about some of the overvaluation in U.S. equities. Maybe if people ring the register on those trades, it's hard to ignore the cash flows that are going to be coming in out of the gold production space or the economics on these projects. Let's maybe go down into the developers that don't have producing assets. You'd mentioned a couple of stocks to me off mic, but any development stage gold companies that have really good projects that you still think have a great value proposition?
Sure. So the first one, and I think it's had a big move over the last month, and I still think it's crazily undervalued, is US Gold. And they've got their CK gold copper project in Wyoming that's now fully permitted. And, the CEO, George B., has told me a couple times, like if he had unlimited access to capital like he did when he was a mine builder at Barrick, he could have this thing up and running very quickly. So they're working on a bankable feasibility study, and then the mine itself, as it's modeled now, and this is based on 2100 gold. It has an NPV of 459 million. So, and the current market cap of US Gold it's got about $150 million market cap. It's only got 17 million fully diluted shares outstanding, which is something that I really like about this stock. So, updated PFS does show an MPV of 459 million. And again, it's 2100 gold. And the reason why they use that is that technically these companies are supposed to use the average of the last 3 years gold price. So, I mean, obviously, if you take this thing and run it at, let's just say, $2,500 gold, then your NPV goes up considerably. 678 million at 2,500 gold. Now, there's another opportunity that they have that they didn't model in the PFS, and they're not going to because they want to just focus on getting the gold and copper mine over the finish line. But the rock that hosts the mine and the mineralization can be processed into aggregate, and there's a ready market for aggregate. And if you comb through the actual technical filing of the PFS, the aggregate business is $131 million. And that's not even in the economics of the PFS. So that adds another $7.70 a share of potential upside value to the stock. Now, this is a stock that I think once they get their mine constructed and operating, it probably will get taken over.
Well, it's interesting to see that aggregate business being a nice kicker. And I remember talking to George B. about that at one of the meetings at one of the conferences, just as another value driver that they're not really speaking to. They're not waving their arms about it, but it just shows you how undervalued some of these development stocks are. And even though it's had a nice run really over the last year, so it's 2024 into 2025, US Gold's done well. When you look at the market cap versus the NPV, there's still that huge gulf there, like we've been talking about all call, where there's still so much value upside to re-rate in these stocks. When we look at the silver stocks, just to fit those in real quick, Dave, what's your take on silver stocks? Anything jumping out to you? Because it hasn't had as big of a run as gold, but it's not bad in the low 30s here, and it did briefly pop up to 34 on Friday before crashing back down again, but it hit 35 last October, and there was some real excitement in September and October in the silver equities. It's waned a little bit, but how are you looking at silver and the silver equities?
I mean, silver's been operating in a supply demand deficit now for what, 2 or 3 years? Going to be an even bigger supply and demand deficit this year. I think at some point, just the market, the economics of supply and demand for silver are going to force the issue and force the price a lot higher. The problem is that silver doesn't have the central bank audience that gold has, and that's what's been driving gold. But I mean, the gold silver ratio is what, something like 90. I mean, that's at the historical high end. And if you study the long-term chart of the gold silver ratio, at some point that ratio is going to roll over, and it's going to roll over quickly. So, I don't know about the next 12 months, but I would say over the next 24 to 36 months, silver will outperform gold by a considerable amount.
Are you expecting that in the silver equities too? Because what we've seen in prior cycles is things like the SILJ will end up leading the pack versus the GDX and GDXJ, and we'll see silver equities suddenly do a moonshot. Like we've seen that in 2016, we saw that in 2020, we saw that in the 2009 through 2011 run right after the great financial crisis, and even once gold got going in the early 2000s, it finally started catching up by 2006, 2007. The silver equities play catch up. Are you expecting that this time, or is this time different because of the delta between gold and silver?
Oh no, I don't think this. It's never different this time, right? I mean, I'm well familiar with all of those cycles, and I've always felt that when you're in a true bull cycle for the precious metals, one that's sustainable and will last a while. For instance, we had 2008 to 2011, and that was really 2001 to 2011. So, and I think we may be in one of those cycles right now. If I look at what happened from 2016 to 2020, and if you study the movement of the various segments of the precious metal sector, I mean, the speculative money came in very quickly at the start of the move, and it focused on especially silver and silver stocks. And that's why you got those moonshots. And to me, when the speculative money comes in early in the cycle, it's not healthy for the cycle, and you're going to have a more short-lived cycle. And right now, in this, you can actually trace this current cycle that we're in to like mid 2022 if you look at the charts. And we haven't seen any action in silver, which tends to attract speculative money, and for sure, as we discussed earlier, the junior microcap stocks. And yeah, of course, when that part of the cycle kicks in, that's where the most money is going to be made. And because silver is such a small market relative to gold, and because the speculative money and the silver junkies really love the silver producers, those ones are going to, we're going to see those things explode eventually. And, most of what people look at as silver producers, there's only one pure silver producer that's publicly traded, and that's Aya Gold and Silver. And that's one that I love. I mean, I think it's insanely undervalued relative to its upside optionality to the price of silver. It does have a gold mine in Morocco that it's advancing, or gold project, and that's just more value added for the stock. But after that, I think Silvercrest, I think 60% of its production is attributable to silver, and then the rest is gold and base metals. And that's the way most of these silver producers and formerly pure silver producers, they've all diversified into gold. They've had to, because there's just not that many pure silver deposits to be found anymore.
Yeah, if you look at most of the big names, most of the household names in the silver stocks, and even in the silver ETFs, they're really more gold focused than silver now. Some of them, they actually have a larger percentage of gold than silver, or an equal percentage. And a lot of the development projects that are out there are either silver base metals and the silver components at 30%, 40% maybe of the project, or they're silver gold, where it's more of a 50-50, half silver, half gold. So it's really hard to find pure silver projects. But when silver starts to run, those stocks will still get the bid because they have silver in the ground, silver in the name, silver production. Any other final thoughts you would leave precious metals investors with here today, Dave, that as far as maybe they're upset that their juniors haven't moved yet if they're in the smaller explorers or some of the smaller producers, but the health of the sector we're seeing that you just laid out, it doesn't look like it's going to be that quick flash in the pan. It looks like there's some legs to this one. So what advice would you give precious metals investors, either in the metals or in the stocks that are listening to this call?
Well, I mean, first and foremost, I always tell people who want to invest in the sector, start with physical gold and silver, buy sovereign minted coins, like 1 ounce gold eagles, 1 ounce silver eagles. My favorite coin are the gold and silver pandas, and don't give them to a custodian. Don't take delivery of them and hide them in your house. I'm sure you can find places in your house where if you get robbed, which is a very low probability anyway, they're not going to look. So I would start with that, and then wade into the stocks slowly. I always advise my subscribers, look, if you're going to start a position, maybe buy 50% of what you would consider a full position for the risk return assessment of the stock. And that way, because we're going to get cycles, and the precious metal sector, especially the stocks, tend to be volatile both ways. So you're going to get, even in a long-term bull cycle, you're going to get periods where we have sharp pullbacks, and you want to use those to add to your position. And like I said, with most of my stocks, when we have a big run, I'll take profits. And then once we get the pullback, I always wished I had taken more profits, but at least I have more cash now to reload what I sold to profits in, or even increase the size of my positions if there's been developments in some of the stocks that make me even more positive on the potential upside of the stock. You got to be patient. If you're going to invest in the junior project development stocks, you got to be patient. I mean, I have subscribers who email me all the time, like, why isn't this stock moving? I'm like, oh, well, I maybe look at it once a week. I didn't even realize it wasn't moving. I don't care what it does in the next week or month. I care what it does over the next 2 to 3 years.
Yeah, some good advice there, Dave. And I think we'll wrap it up there for today. But some sound advice on holding the physical metals in your own possession instead of using the custodian, wading into the resource stocks in tranches. You don't have to buy it all at one plop. You can kind of average in and use volatility to your advantage when it pulls back. And like that third point you mentioned, having that patience to let the thesis play out. It's going to take months or years, not days or hours. So you got to give the time in your thesis to play out based on the work strategy and the value proposition that the company has. And most investors struggle the most with that last point you made, Dave, the patience. So great thoughts. And if people want to get more thoughts from Dave, definitely click on the link below this interview. It takes you over to Dave's site where you can learn more about the publications he has, Mining Stock Journal, and also the Short Sellers Journal. So, Dave, always great having you on the show. Always a wealth of insights. And as always, looking forward to our next conversation.
Sounds great. Appreciate you having me on again, Shad.